everyone, me Kevin here. In this video, we're going to talk about 5 stocks that you absolutely have to be paying attention to right now. First, we got to talk about the elephant in the room. Folks, last Friday, I made a video talking about how I love this company called Affirm, why I love this company called Affirm, and why I'm throwing over $600,000 into it. Yesterday, I made another video saying I'm working to double my investment in Affirm, and this morning I bought the slight dip that Affirm had, and I loaded up on about another $57,000 of Affirm, and I really want to keep loading up. Unfortunately, Affirm is absolutely going bonkers. From opening around 16% up, we are now up another 20% on top of that, which is absolutely nuts. Congratulations to all of those of you who bought Affirm, whether you are public watchers or you are those who get my alerts right away when I send them in the Stocks and Psychology of Money group. When we bought Affirm last week, when I bought it yesterday, you name it, whatever. I hope you're doing very, very well here on Affirm. So here's the thing though. I want to keep adding to Affirm. The big issue I have with Affirm right now is take a look at this. It's worth noting this. Support.com has been an explosive trader stock, huge momentum, and it's sort of bled out, had a momentum day, now it's having a red day. It's down 15%. Hippo had some really nice bouncing off the bottom, then got some big momentum, and we rode this wave pretty nicely. I've made over $200,000 on Hippo. Even with it being down 13%, I'm still up over 200K on this particular trade. Really like Hippo, and quite frankly, I think it's a fair value. Somewhere between 550 to 6 is a fair value. I'd actually say it's a good value for the company. I think up to 650, it's fair. Up to 7, it's okay. And once you get over 7, it starts getting a little stretchy. And that's kind of where we bounced off, which I think is totally normal for the stock. But there's a particular unique trend we've got to pay attention to here. Look at everything that's down today. Clove, Upstart, Rocket Lab, Gevo. These are all stocks that have seen insane parabolic runs and pullbacks. And what's crazy is right now, pretty much the only thing seeing a parabolic pullback, with the exception of some others I'm about to talk about, is Affirm. Affirm is just going nuts. Again, a 20% explosion on top of what we had this morning is absolutely insane. I do not think it is sustainable. I believe that right now, and you can tell when you look at the order book, there are way more buyers than there are sellers. That is what's driving this price up. I believe this is moving because of, well, obviously the earnings we talked about yesterday, but right now, I believe a good portion of this gain we're seeing is pure speculation. It's call option buying. It is gamma squeezing. It is YOLOing. It is speculating. And don't get me wrong, I'm all for speculating. I had a speculative hedge yesterday that I lost $27,000 on, and I had a speculative call option yesterday that I made $47,000 on, okay? So that was one was on Dave & Buster's, one had to do with Affirm. So it's okay to speculate, but you just have to know when you're doing a YOLO, you have to know when you're doing a YOLO, right? I'm looking at Affirm as a company that I want to own for the next 10 plus years. I'm very excited about Affirm, and I believe Affirm has a very strong moat with Amazon. A lot of folks are like, oh, any bank can do this. I don't think so. I don't think any bank can get into the merchants that Affirm has. You don't want to overwhelm your customers with choices. Sure, could other banks maybe start innovating and making their credit cards, debit plus cards like Affirm? Maybe, but it's going to be a big shift. It's going to take a big educational change. I don't see banks being anywhere near quick enough to react. So Affirm, it's a big winner for me. I cannot buy it at this level. I last bought it at 108. I originally bought it well below that. I cannot see myself buying this right now at 125. Now, there is a danger, and this is the risk factor. There is a danger that it ends up doing an Upstart, but it's worth looking at Upstart's history. This is Upstart. Upstart runs, it falls. Crazy run, fall. Crazy run, fall. Insane run, and it's just now starting to do a little bit of 6% turndown. I personally think Upstart is way overvalued, but it's fintech sexy right now. People love it. It's been printing tendies like crazy. I've made money trading Upstart. There have been a lot of traders in this particular stock, but specifically, the number one stock we want to pay attention to right now is Affirm. And in my opinion, we sit, we stand by, we wait for this to pull back. I could be wrong. This could turn into a $200 stock, and then you know what? Fine. Wasn't meant to be. That's fine. Now, I wouldn't be surprised if we start seeing pullbacks at trader pullback windows. Sometimes that could be within an hour of closing where traders take their tendies and then they leave. It could also be 2 or 3 days later. So I've got options expiring on Affirm next Friday. I'm not making any moves on this stock until probably Tuesday or Wednesday because it's a covered call. And what I want, they're covered calls. And what I want to do is make sure that we get Affirm to the place where some of that speculation and euphoria is gone. And one of the ways that happens, it does not happen intraday. This is what's so important to know is people they spend their day refreshing the stock charts. They're like, oh man, it just keeps going up at 1% at a time. Okay, I'll FOMO in. You got to remember, the way to get the speculation away from Affirm is not Affirm going up 1% at a time. People won't sell, right? The way to get that speculation to squeeze it out of there is for the sexiness to go away, the hype to wear down, the news coverage to wear down. This is all over the news right now, Affirm. Then a new shiny object comes around and the traders go from Affirm to that new shiny object. That's where I want to buy the dip. That's literally what's happening right now to Hippo. Affirm is the new sexy heavenly maiden that just walked in. And so people are taking their money from the trade stocks. Look at the ones that are the biggest losses today. Clove, Upstart, Rocket Lab, Gevo, Hippo, Support. All of them have had massive, they were trending stocks on StockTwits. They're momentum stocks. This is where the money is going. It's going into Affirm right now. And I just caution being careful that if you want to hodl this thing, personally, I believe this is not the place to buy it. I love the company long run. Do I think you can go wrong buying it? No. I think it's overpriced right now? Yes, it is pricing in perfection right now. And hey, if it runs, oh well, I was wrong. I've been wrong before, okay? I was wrong with my hedge against this stock, but that's okay. I was right on something else. And this is how investing works. You want to be right many more times than you're wrong. That's the goal. So that's stock number one. Let's now talk about some other stocks to pay attention to. In my opinion, we've got some really nice upgrades happening to Matterport. Personally, I expect, because this is a SPAC, and we know the history of SPACs, and we know the reopening is happening, even though we've got the Delta variant surging, which more stay at home means more Matterport, right? We got a price upgrade to $20 on Matterport this morning. That's helping Matterport move a beautiful 11%. I believe Matterport has the potential of slipping back down into that $14 to $15 range. Could be wrong about this one, but that's just historically what it's done. If it ends up running away over $20, that's okay. It's done that before. I'm going to be patient with Matterport, but I encourage you to pay attention to Matterport. Matterport is a company that you can buy and hodl. It is a high quality company. Even though it's a SPAC, don't get mistaken by Matterport. These 3D scans will be the future of America. I wanted to invest in this company before I ever knew they were going to be a SPAC. And I emailed them. I'm like, please let me invest in your company. They've never replied, but I love them. 3D scanning for real estate, boats, planes, insurance, engineering, construction. Pay attention to Matterport. Matterport Affirm A+ stocks. Peloton is not going to be one of the 5 stocks I'm going to mention here. I believe it's running on hype that they're launching a clothing line. The clothing looks great. It looks beautiful. I enjoyed the colors. I enjoyed the look of the clothing. It's not a company that I think is deserves to be valued off of a clothing line because I believe the people who would buy the clothing would be existing customers, not necessarily new customers, which may be true of any clothing brand in reality. But I believe you've got a limited pool of buyers compared to, let's say, a Lulu or a Nike, which might have more retail presence or more online presence specifically for their apparel store. I could be wrong. This is just one that it's not going to be on my 5 to watch. Then let's get to stock number 3 to watch. Stock number 3 to watch, folks, Enphase. Enphase right now is trading for about 26 times 2025 earnings. Now, some people are like, oh my gosh, how could you use 2025? The reason I use 2025 is because a lot of the big companies that we watch are not profitable yet, or won't be profitable until 2025. And so I use 2025 as a metric to compare all companies. So for example, I can compare Google and know that their 2025 forward PE is around 13. I know that AMD is somewhere around 11. I know that Nvidia is somewhere around 45. So there's a lot more potential growth that's being priced into Nvidia, right? But I want to balance out my portfolio. I know that Tesla's trading somewhere in that 55 range and NIO's trading in that 65 range. So I want some highs, I want some mids, and I want some lows just to balance out my portfolio. I don't want to go all super high PEs for forward. That's just what I do. Some people are like, but things could be wrong. Fine, everything could be wrong. I get it. But that's just the analysis that I do. It's one of the types of analysis that I teach in Stocks and Psychology of Money. Link down below. That coupon code now expiring September 24th. Okay, so why do you want to pay attention to Enphase? Well, first of all, we're dangerously close to this support line here at 155, at 160. I think this is a good buy. In fact, I bought some more this morning. Every time I make a purchase on dips like this, I always send an alert in the Stocks and Psychology of Money group. Enphase, in my opinion, is a sleeper. We fell down to 120 in May. That was oversold. It was so oversold, the company itself bought back its shares in these low prices here in May. It was brilliant. It's a sign that the company believes this here is undervalued. I also believe this is undervalued. Yes, is there downside risk? Of course with Enphase. The biggest one is the chip shortage. The chip shortage is holding back a lot of Enphase inverters. But we just heard news that Tesla is no longer doing their Tesla solar leasing. In my opinion, this just opened the gate for more people using Enphase. Why? Because even though Tesla will still sell their solar panels and they have their own inverter that is not a microinverter system, Enphase is one of the top tier options for home solar use or even business solar use. They do not do utility scale kind of solar products, but for the home solar invasion, Enphase it's what I have on my house. I've bought from them twice. I have an Enphase battery. I didn't even get the Tesla battery, even though I've got way more money in Tesla. Enphase, do not sleep on Enphase. Enphase over the next 5, 10, 15 years, this is a killer stock, and I expect their inverter sales to triple as soon as we get the supply chain issue resolved. That could still take a year. The supply chain issues could get worse and not better. So you've got to be careful about that in knowing that if you see Enphase bleeding, it's not Enphase's fault, it's the entire market's fault. It's really worth paying attention to that. So Enphase, watch Enphase. Really, really good one. Okay, so we talked about Enphase. We talked about Affirm. We've talked about a Matterport. These are three really, really good stocks. What's another particular stock that we definitely, in my opinion, want to pay attention to? Well, for me, something that I'm really, really interested in is buying value. And in my opinion, value is something like Hippo and Lemonade. Now, I don't want to say this is a value stock. I just mean more recent value. That is, they are off their highs. Hippo was off of its SPAC valuation. It's off of its pre-SPAC runs or pre-SPAC merger runs. I believe that $5.92 is a very fair price for Hippo, the insurance company. And I believe Lemonade has some really good, so I'm going to bundle these for number 4, Lemonade and Hippo. I'm going to bundle these here. I think Lemonade has a really big catalyst ahead of it when it comes to car insurance. Now you can Google my full thesis on these two, just type into YouTube, Meet Kevin Lemonade. Look for the video, I believe it was titled Investing $1 Million in These Stocks. Watch that one for more of my Lemonade thesis. I've also done other videos on Lemonade. For Hippo, type in Meet Kevin Hippo Insurance. You should see a video on putting $600,000 into this stock, and they give you detailed information on why the potentials that I see in Lemonade and Hippo. Now, personally, these are not value stocks by any means. They're the opposite of value stocks. They lose money. They are very, very expensive on the PE ratio wise. They make Affirm look cheap. They make Enphase look dirt cheap. They make Enphase look like a bargain, okay? And Enphase is relatively expensive. But you've got to pay attention to these two because they are revolutionizing the way that we do insurance. When Lemonade comes out with car insurance, I think Lemonade is going to pop. And the interesting thing is, Hippo tends to associate with Lemonade. And what I mean when I say associate with Lemonade, I mean they tend to almost rubber band together in valuation. They have a relatively similar valuation right now. Hippo might be a tiny little bit ahead, but I'm very interested in watching these right here. So that is my set number 4. Okay, set number 5. Set number 5 is more of a basket. And so I'm gonna write this basket down so I don't mess it up here really quick. Okay, it's Sunrun, Sun Power, Solar Edge, Canadian Solar, and First Solar. So this is a basket. The reason I have a basket of these stocks is because I believe that solar stocks in general have really been kind of pained, and they are the future that we are looking at. I would probably buy these in like an M1 Finance. In fact, I'll just make an M1 Finance really quick. I'll just call it metkevin.com/solar or something like that. That way you could just see the basket is the point of that, to see the basket. So again, Sunrun, it's at relative lows. It's a solar company. I'm not the biggest fan of any of these other companies individually. I just look at them as more of a little bit of an index to park money into solar plays. My favorite solar play, obviously though, is Enphase. That's my favorite. But we've got a little bit of a bleed on all of these right here. SunPower, Sunrun, Solar Edge. Tesla used to use Solar Edge for their inverters. They don't anymore. Canadian Solar. Definitely a company that I want to own. We're sitting right here in this channel. We're not at all-time lows or recent lows here, but we're kind of depressed right now in the solar industry. The solar industry has not gotten a lot of love, so I would put a nice basket of these 5 together and have that be sort of one allocation. So we've just gone through 5 big stocks. Affirm. I want to be clear on Affirm. I have lots of stocks. I want to own a lot more, but I'm going to wait to buy more on Affirm. I am also interested on Matterport, buying on a big dip here. I'm waiting for Affirm and Matterport to pull back before I buy any more of these stocks right now. Instead of buying those, I'm much more interested in buying Enphase, my metkevin.com/solar basket, and now I can't remember the other one. What did I mention? Oh, Hippo and Lemonade. Yes, Hippo and Lemonade I've got big exposure to already, so I'm pretty set on Hippo and Lemonade. In fact, with Hippo and Lemonade, you can get some pretty nice premiums right now for selling puts. So there's an argument for exposing yourself with selling puts on these, especially if they do end up trading sideways for a bit. The downside is you won't be able to really participate well in the event you get a big run. You'll still make money on your put because it'll be very easy to buy that back and close that out. But you won't get to participate fully in the run. So these are my 5 big sort of stock baskets, I should say, to look at. 3 of them individual, then a duo, and then the basket of 5. So I hope this provides you some insights. If you like this kind of content, make sure to subscribe. I did this entire video in a one take. I'm really proud of myself, which basically means I don't have to do any editing, which is kind of cool. So cheers to that. Go check out the programs, link down below, and use that 40% off coupon code. Thanks to inflation, the price does go up about $50 every time the coupon code changes. Thank you so much, and we'll see you next time. Bye.